South Africa's private sector credit growth quickened to 6.21% year-on-year in December, while the trade account surprised to the upside with a 4.7 billion rand surplus. Attard Montalto, emerging markets economist at Nomura International, now joins us to give us a bit more insight into these numbers. Thank you so much, Peter, for joining us. It seems quite surprising numbers on both accounts. Is there anything that really stood out for you? Let's start off with money supply and private sector credit extension.
Well, I think the key thing about credit extension was that there was a tick up in particular in corporate credit growth versus my model, at least, and what I was expecting. Pretty decent 1.4% growth on the month there. And that really, I think, showed that despite the slowdown that the companies are seeing in terms of future sales demands, things like that, there is now the availability of credit that perhaps there wasn't so much a quarter or so before to help them through this time. And household credit doing pretty well as well, increasing about 0.4 on the month, and showing that retail sales can continue its pretty strong series of prints going forward into the new year as well. So overall, I think it supports a view of growth slowing, but certainly not overly fast, supported by credit growth.
With regards to the money supply number, 8.2% year-on-year from the 7.2% that we saw in November, and far above the expected number. But when you look at it from a historical basis, that many analysts are still saying it's quite modest. Do you agree with this?
Well, really, I mean, I'm not a monetarist in the sense of believing suddenly ticking up in monetary supply equals hyperinflation. But, I mean, you need to see money supply growth going much, much faster from here to really, I think, cause any great degree of concern for inflation going forwards or in terms of wage growth or anything like that. So, I mean, I wouldn't read too much into these numbers at all until they start getting well above sort of 15% or so, when I'd start to think about the impact on inflation.
With regards to the unsecured lending space, when it comes to credit extension, that has been rising quite significantly. We know that the previous month in November, we saw an increase of around 20% year-on-year. For December, an increase of around 30%. Is this a concern for you? It seems that a lot of investors out there are starting to pinpoint this number as a very interesting point to look at.
Well, I think it depends how you look at the number. I mean, I prefer to sort of adjust these in the back of my mind, given demographic shifts that go on, given there's larger impact perhaps of a stalling of durable goods purchases, things like cars across the crisis to some degree, and therefore a need for pick up on that front going forwards. And it's the same when you consider credit growth in many other countries. It is starting to tick up. It is starting to be something certainly to watch. But when you take into account some of those other issues, I wouldn't say it's necessarily at danger levels yet. And it is, I think, part of the reason why retail sales has been doing pretty well in the last half of 2011.
Let's also touch on this trade number, because most were expecting, well, consensus was that we would actually see a deficit of 1.6 billion rand. The actual number coming in at 4.7 billion rand in a surplus. It's a very volatile number. Is there any interesting points here that we need to look out for? And again, I mentioned it is a very volatile number, so this could change very quickly in the months ahead.
Well, I mean, I wasn't surprised at all. It came in line with my forecast, which was 4.5 surplus. So there is always seasonality in December, and we saw that again. It's more interesting to look at the breakdown, and in particular the offset between US, Europe, and Asia. And we saw a little bit of downside surprise, I think, in the Asia numbers. Some of that China slowdown story starting to creep in a bit, but nothing really to get too dramatically concerned about beyond what we were already talking about in previous months. And Europe actually stabilizing to some degree in December, though I think that probably still has more to fall through the first half of this year as the Eurozone properly enters recession. We can see export growth to Eurozone fall further into negative territory. It's still around zero at the moment.
Peter, I know you've also been looking at Eskom's system update that we saw coming through yesterday. You have been citing this as a big concern to GDP going forward, and also, as you mentioned in your report, Eskom has been quite transparent about the risks that lie ahead. What kind of impact can we expect on growth?
Well, the first thing to say is you're right. Eskom has been very transparent, and we certainly have to welcome that very detailed report that they sent out. It's really about now what happens to save the amount of demand that they want to look to do this year, which is about 3 gigawatts of power, and that is a lot to ask from industrial producers in particular, given the backdrop we're seeing of lower growth of export demand decreasing, to add on further constraints on their competitiveness like that. But having said that, I think there is clearly going to be a drag coming through this year as they start to make some of those adjustments, and we still have to think about the tail risk of load shedding. It's still a tail risk, but it's definitely there through the middle of this year.